Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Hello everyone, checking back in on the Canadian MJ sector here. We're going to look at APH, WEED, ACB, OG, EMC, HMMJ on the daily and the weekly time frame. So a big time pullback in the reaction to the sell the news event when everybody knew the date that the news was coming, and it wasn't anything that shocked the market. There were no surprises, so we saw the sell the news event. So we're still in that pullback, trying to recover, trying to establish a base of support. A lot of names are still holding their lows of March support, and we're going to look at WEED, which is not. WEED is almost a lead bear at this point. It is very, very weak, and it is the weakest daily chart that we're about to look at right now, and I'll point out why. But we do have some bullish reversal candlesticks forming here at the end of the week, and the bulls are going to be looking to confirm those on Monday. But considering where we are coming from, it's going to take a lot to turn around the current trend that we are in. So looking at APH, we had $6 very key support, and we dipped below it. But we have to remember that on the daily chart, it is the close of the candlesticks that we are concerned with. So the $6 support level held. We closed above it, and we formed a bullish reversal candlestick. The bulls bought that dip right at the open. The resistance is 625, then we're looking up. The next resistance, I would look at some previous support now resistance up at 660 and 658. There was a little bit of a base of support there. But why this move is going to take a bit for the bulls to try and turn things around is because the last clear lower highs that we have seen is 689 and 715. So they're way up there at this point, 10% to the upside. So whenever I see a move like that, where I know that the bulls have to see a very significant move to break the lower high pattern, I anticipate that it's going to require a bounce, consolidation, a higher low, and then continuation. The ability of the bulls to just shoot right up 10% to break this lower high pattern and regain control on the daily time frame is not likely. So we're going to have to see a green day tomorrow, confirm this bullish reversal candlestick, see a little bit further upside, consolidate, the bulls take a breather, we establish a new higher low, and then we look to try and break this lower high pattern. That's what it's going to take. If we close below $6 on APH, it is a technically significant bearish development in the short to mid term. So $6 is the line in the sand, and the bulls held it today. Weekly middle Bollinger Band support 606. Bulls really want to hold this level as well. WEED, we'll look at in just a moment. When it lost its weekly middle Bollinger Band, everything changed, and that's when the bears really took over. So the bulls do not want to see that happen. We're defending this level now. One good thing for the bulls is declining bear volume on this pullback. 3 red weeks, declining bear volume. Now the bulls need to show up. We need a bullish reversal candlestick on the weekly time frame. We have it on the daily. We need follow through Monday, and we need a green week holding this middle Bollinger Band. So WEED, look at how weak we are here. Very clear lower highs and lower lows. In the video I did last weekend, pointed out how it was really on the brink here of another major leg to the downside, and that's what we've been seeing all week. So we did build a double bottom at the low here of 886. Opened right at that level, and the bulls showed up right at the open. And we closed up near the high. So it is a bullish reversal candlestick, and we are looking for confirmation on Monday. The bulls do have momentum heading into Monday. It's the same story. To break the lower high pattern, we have to break 1037. That's over 10%. That's almost 15% from where we currently stand. So we have to see a bounce. A lower high will set. We have to form a higher low and then a higher high to try and reverse this trend. The weekly time frame here, losing the middle Bollinger Band, is when it all turned around and went downhill from there. We back tested, rejected 1, 2, 3 weeks in a row. We've seen pretty much 5 weeks since we lost that middle Bollinger Band support. The bears are close to taking over. 886 is support, 851, and an absolute must hold 765. If we break 765, the longer term bulls are saying, uh-oh, we're going to have to sit through a lot of red here. We have to consider what's happening here. A lot of people are taking profit because we have no fundamental catalyst coming in the near term, no known fundamental catalyst coming until a year from now, over a year from now. July 2018 is, I believe, the target. So that's a significant amount of time. And bulls are saying, okay, I want out, and I will likely be able to reload lower. And the more that we drop, the more people say, okay, I'm calling it. I'm taking my money out. I'll reload lower later. And we're seeing that magnify itself. So that's what's currently going on in the sector. And there's a lack of buyers. Everybody that wanted to buy up on all the hype has already gotten in. And they either bought at the top if they were buying on that news, or they are locking in that profit and looking to reload. So ACB here, and this is why wheat is so weak. You see APH, we still have March lows. We're defending that $6 level. We've got ACB, we're above the March lows, so trying to form a higher low. And WEED, we just hit the lowest price in months today and yesterday. So there is no support on the daily time frame to be watching, where most of these names do still have daily support. So ACB, a weak bounce today in the sense that we have a big upper wick of profit taking. Whenever I see an upper wick, you have to think of momentum. So compare these candlesticks. Wheat on the daily, for just today's action, the bulls close at the high of the day. That shows bullish momentum, not a lot of profit taking, and bulls looking to hold over the weekend. And you look at ACB, and that upper wick shows profit taking and not as much conviction to hold over the weekend. So the 50-day moving average held as support once, twice. Now it's acting as resistance now that we lost that. So previous support acting as resistance. Bulls have to close over the 50-day moving average. In order to break the lower high pattern here on the daily, we're going to have to get over 290. Significant move to the upside required. So same scenario, we have to see higher lows and higher highs. Base of support right now is 250, a nice round psychological number. Bulls want to hold that level going forward. If we break 250, I'm looking down at 241 and then a gap at 233. Weekly time frame does have a nice little higher low, higher high pattern in play, and that's 221 is the must-hold level to keep that intact. So the bulls have a bit of wiggle room. Same thing with the volume, declining volume on this consolidation. Good sign for the bulls. Bulls need to show up in the sector this next week. If we don't see bullish reversal candlesticks on the weekly time frame, it's going to be a red flag. OGI on the daily time frame, same thing. We're holding the lows of March. We're forming a higher low pattern, and just visually here, I can see an uptrend, and this is just from looking at thousands and thousands of charts. I can just look at this chart and say, okay, we've got an uptrend here, and we are holding that uptrend line. So that is where I would put that level, the low bouncing off of it. And again, I'm not concerned about the dips of the candlestick. I'm concerned about the closes. No candlestick closing below this level, and this is an uptrend support line to be watching as a guide to see if the bulls can hold their strength. So we have a bullish reversal candlestick today. Look at the volume. That's a good sign for the bulls as well. Increased volume over the bear volume on the way down. Let's check in on the other names real quick. Nothing much for APH, not really significant bull volume. WEED, not significant bull volume compared to the bears. ACB, same story. So OGI stands out. That's a high bull volume, and we had a gap down for buying scenario. Bulls bought that gap down. Bullish reversal candlestick. To break the lower high pattern, we have to get over 289 and 297. So same thing. We're going to have to establish a higher low and higher high. We'll keep our eye on this uptrend line. New support is 242. If that level were to break, we would be looking down at 236 and then a gap to fill at 230. So same story. Bulls must confirm this reversal candlestick. Bulls are liking the volume here. So this chart right now for me on OGI is looking pretty good in terms of comparison to the other names because of the low bear volume, a strong bull volume day to day. The story is the same across the sector. The bulls must confirm these reversal candlesticks on Monday, and we must see bullish reversal candlesticks on the weekly by the end of next week. EMC still has March lows as support. And we're watching here our low of the pullback, 234 must hold. Upper wick showing a little bit of profit taking. 259 is resistance, the high of today. And then 295 to break the lower high pattern. So on the weekly time frame, EMC bears are very much in control because we're coming off of all-time lows essentially. We hit a bounce, must form a higher low here, and then try and head back up towards 338. So a weekly chart that is weak on EMC due to the lack of price history and the fact that we did break down to lower lows. No real support, trying to build a couple levels down here, but not much support in this area for EMC. HMMJ is the same story. Fairly recent trader, was great for the bulls when we had no history and we were running, but now that we're in the downside and we broke the lows, we have no support besides 983 and 984. Those are must-hold levels. Otherwise, we are in the opposite of blue sky breakout. Let's call it black dirt breakdown, and there is no support besides psychological levels. The bulls need to confirm the reversal candlestick. We have very little weekly history to be going off of. Almost not even worth looking at that weekly chart yet for another couple months. But the daily chart must confirm this bullish reversal candlestick, and the level to break the lower high pattern is 1090. So we need another 8% to the upside to break the lower high pattern. So all about the ability of the bulls to confirm the bullish reversal candlesticks on Monday. And if we get that, that will set the tone to start the week on a good note, with the potential to see bullish reversal candlesticks on the weekly time frame as well. I'm going to keep a close eye on OGI because of that volume and because of the low bear volume on the way down. And I'm going to be keeping an eye on APH and that triple bottom at $6. And WEED is a lead bear. Bulls really need to turn things around. I appreciate you watching. Feel free to ask any questions, and I will see you next weekend.